The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. On Tuesday's trade, we saw the wheat market rebound off of some lows and getting support from a pretty poor winter wheat rating. Meantime, quartered soybeans, kind of a mixed bag there. Corn tried to follow wheat higher a little bit. Lower action in cattle, higher action again in the hog market that's really been finding some robust support here as of late. Let's talk about what we're seeing in this market trade. Joining us for a conversation, Jacob Burks with agmarket.net. Jacob, welcome back to the show, buddy. How are you?
I'm good, Jesse. Thanks for having me. Appreciate it.
Absolutely. Where do I start? I feel like with everything going on that's impacting these markets in one way or another, you made a comment to me before we went live that we're still kind of chopping around here as we near the end of the month and first notice day, elections in front of us next week, et cetera, et cetera. You know, you look in terms of the grains, quartered soybeans in particular, not doing a whole lot, just kind of going nowhere, maybe slipping a bit in beans, corn, a little more range bound. I mean, there's a lot going on right now, yet the markets aren't moving a whole lot.
No, I mean, it's you've seen some non-seasonal moves. You've seen some spread activity that just doesn't make sense all the time. Probably the most trending market was probably your wheat market. That's been kind of a low where we've seen the prices just grinding lower, and that's the most positive thing that we saw today. So you saw the market up in the Chicago wheat, Kansas City wheat. Everything was double-digit gains today, but really right now we've just kind of stopped the downward move. The resistance that we ran into as we went higher today was right along the 10-day moving average. So you found some technical resistance there, and I would have to say in all these markets, these grain markets, there's been a strong technical tendency with all of them. I think right now you've got some of the best support that we have right now is on a 10-day moving average in the corn market. You see the bean market, we traded through the 10-day. Now we're bouncing up and touching it last 2 to 3 days in a row. So a lot of technical indicators that are just kind of controlling where we're trading around in this kind of consolidation area. Not really in a big trend one way or the other.
Well, let's talk a little bit about basis and spreads. I've been paying attention to like the Dees March corn spread, the Nov Jan bean spread here as of late. I mean, you look across the countryside and look at what basis is doing. Plenty of farmers maybe making some reluctant sales here off the combine. I mean, talk about what you're watching in terms of some of those spreads and the basis action, Jacob.
Well, the first thing is we've harvested a big crop. I mean, we've harvested a large amount of corn and a large amount of soybeans. I personally look at as the producer was going out there and they were making some forward sales as markets maybe popped or something. I think a lot of those sales were going out into some of those deferred months. Okay, you had a lot of carry in the market, strong carry. We haven't seen carry in a long time. To where the farm producers out there looking at, hey, there's an opportunity out there if I sell it, if I hold it to March. So I think a lot of that was done. I think as the harvest was happening, you kind of left a void there for some of these exporters or some of these commercials that just needed some grain now. So you saw some really quick major moves in basis. So I think that was one thing that's kind of opened everybody's eyes. Is like, hey, if this, why are we popping now? Why are we seeing some basis jumps? And I think a lot of that is just, the showing up of some of these commercials, these export markets that are saying, hey, we need something now, and we got to get it covered. The other thing that's really hurting is the fact that you've seen basis levels moving up and down the river simply because of what the freights have done. I mean, you got some freight charges that are getting extremely high right now simply because of water levels, of these levels. So you've seen a large fluctuation with a couple of different things there. Yes, the market. Yes, the demand of some of these exporters, but also just the transportation to get it to where it needs to be.
So thinking about all of that, let's talk a little risk management here for row crops as we're wrapping up harvest. And I know we're picking up a more active weather pattern this week. Maybe that slows down the remaining 20% of harvest here that we have to go. Maybe not. But overall, we're pretty much wrapped up at this point. So thinking about end of the month and making some of these decisions on contracts, and maybe you're looking to roll something out into the carry here into Jan, March, you name it. I mean, from a risk management standpoint, corn, soybeans, what do folks need to be thinking about right now?
I think you kind of got to break this up into a little bit of different, the corn versus the beans in somewhat of a way. First of all, if you go back and finish the conversation that I didn't finish as far as the spreads, you saw the Jan spread get to a level that we didn't really think it would. It got up to 3 cents a carry. And I think it's traded back down to 14 cents a carry today. And so that's something there I think you have to pay attention to. If you have your hedges in the NOVE, is we were looking for an opportunity to maybe roll that at some of the widest spreads you've seen. Okay, you also see that the interest rates got cut. It potentially get cut again here, quickly right after the election. So you got an opportunity now to be paying attention to what kind of carrier you're expecting to go out to January and be nimble. And by being nimble, I mean have orders in place and be ready to move those out to the January quickly. You don't want to sit there and watch this thing for some reason go back up into maybe an inverted market or something of that sort. Risk management in the beans, you've got a huge crop coming in South America. We're getting moisture down there. Their planting is slightly behind, but it's catching up quickly. I think that a person that doesn't have beans priced there needs to be very, 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 very conscious of what could happen as we go into a good growing season in South America and lay some risk management underneath there. I love using put options. I think that they do you a very good opportunity, very good justice to lay a floor under there and give you the opportunity that if you're wrong, if that market's not going to move down, if we have some problems in South America, you'll leave the top side wide open. On the corn market, I do believe that some of this demand that we're seeing coming into the corn market has been good. The processors have stayed strong. We've got an export market that's been a little bit better. I think everything's been moved up a little bit because of a couple of things that you said. The end of the month, the election. I think these exporters are coming in here, and these end users are wanting to be pretty aggressive, getting their name on the books, getting stuff on the books. So I think from the corn market, I would have to say that there's been a little bit of not floor put in the market, but I don't know that we have the amount of risk that we have in the beans right now. But you got to look at that. The reason that we don't have as amount of risk, there's not as much volatility. There's not as much fear. So therefore, some of these options that we have the ability to buy are a lot more reasonably priced this year.
And with the thought of the elections too, a week out from the elections, what does the average farmer need to think about here? Should they be looking to protect some risk ahead of the U.S. elections here with their grain marketing, with some of the volatility being a little bit lower? Is that something to consider, Jacob?
Well, volatility is a measurement of how much fear is in the market. Okay, and right now the market's telling us there's not a lot of fear. It's chopping. It's kind of going sideways. We went down. We tested the $4 level again. We bounced off of it. The market showed that it's reluctant to go down there. So that's whenever we say that these option prices have less volatility in it. This means they're cheaper. They're not. You're not having to pay as much because right now the market doesn't have the fear that it's going to go to $3 like it maybe did at some point of the summer. So what should you be doing? Yeah, I think that it's really good. I don't think that as a user, as a producer, that you have to run out there and sell all your stuff before the election. If you told me who won the election right now, I can't tell you. I can't tell you how the market. I can't tell you how the stock market's going to react, how the demand side's going to react. What I can tell you is when there's ideas and thoughts out there that you're going to charge people more to buy our stuff, I think it doesn't do good. And I think that there's a lot of export business being done right now with the fear of what's to come if the administration does change.
Jacob Burks with agmarket.net is our guest analyst here today on Market Talk. We touched on wheat a little bit earlier, but again, good support there Tuesday, bouncing off some of the recent lows. This wheat market has felt very soft to me all month long. Obviously, cheap world competition out there, things like that. Any big notes for you in the wheat markets broadly, Jacob?
The thing that was reported yesterday was a little bit of a surprise. I think it was 9. I think it missed 9% from what the expectations were, or what last year was. So it was the second smallest, second worst conditions rating report for the wheat since in the last 39 years. So it was a dramatic change. I mean, we all kind of knew like, hey, it's not going to look great. It's not going to be great. There's not a lot of moisture out there, but to take that much away from it was a surprise to the marketplace. I think like I said, we're a double digits higher in all three categories. but there is some overhead resistance. I think the other thing that's kind of weighing on that is there's some pretty good rains forecasted across northern Texas, central Oklahoma, in those plain areas. That's where could really use the rain there too. And so I think that probably has the market capped a little bit. Wait and see what's going on. Now, the other news is out there is that Russia's, they're wanting to put some type of quota on that says, hey, we're going to, our exportable, wheat's going to be, a little bit higher. And I think that can help drive some of the prices up of our wheat. So I think those are the few things that you have to pay attention to, as far as, global competition. Yeah, there's just a lot of it out there that hasn't been that major problems. I mean, we had a few problems. European dryness, you had some Australia dryness, but there's still, global supplies are down, but not as bad as what they've been in the last, 10 years.
We were talking crude oil a little bit off the air too, and the impact that has had on the markets. You mentioned to me palm oil, of course. Been watching soybean oil, things of that nature. So how much is crude oil playing into things? Obviously, huge drop to start the week after the Israel-Iran situation. We saw that unfold over the weekend. So, I mean, you look at crude oil, what's the influence there? What do we need to be paying attention to, Jacob?
I think there's, a couple things, else, as far as crude oil, I mean, that's a direct reflection of what's this bio industry going to need. As you watch ethanol and you watch the bean oil, the couple of things that we have to have a successful bioenergy industry is we need some regulation of that they have to use our feedstocks coming from here. They also have to have the 45Z would encourage these processors to be a little bit more willing to invest into the programs, be a little bit more willing to, soybeans in general would just be benefit from those type of regulations. But when you see something overnight, like you saw where all of a sudden, crude oil is going to drop $4, I mean, that definitely weighed, a direct immediate effect on bean oil. But as far as what we're watching the crude oil do, it goes beyond just the soybeans. It goes into, hey, what's this economy going to look like? What's, economically when crude oil moves, commodities are moving with it. And we saw a big move, in the last 2 weeks of a lot more money just coming into commodities in general, whether it's gold, whether it's energy, whether it's the stock market, the Dow futures, or any of the grains or livestock. So, all that movement has kind of had an abrupt top, right? So seeing that crude oil move down, mostly going to affect the bean oil and the soybean market as we go forward.
Let's talk livestock. Let's start with hogs. I know you like to cheer for the hogs on the football field and on the court there, the Arkansas Razorbacks, but have to think you're cheering for the hogs on the futures board too. Man,
I mean, as they keep rallying and break out, it's finally I got a reason to root for the hogs again. So.
I know, yeah. And thinking about this, setting some new contract highs here this week in lean hogs. Another solid day Tuesday. What's going on in this hog market, Jacob?
It's something that we've seen just some strong demand. You've seen cutouts continue to move higher. I think that, from the Hogs and Pigs report, we were expecting to see inventories lower. That seems to be missing the target every week as we continue to kill more and more and more. Is it something that the proteins have stayed strong for a while? And I think it's a resiliency in the American domestic economy that says, hey, we're going to want to have protein in our diet. I think whether you look at the cattle or whether you look at the hogs, it's just something that we have figured out that the consumer still willing to buy, even as these prices go higher. So, when you break through too, also you push through some of these certain resistance areas on the chart, the technicians take over, and it's just, stacking on top of each other. We hit some stops the other day and it just kept adding, we kept adding some contracts to that. So, it's just quite a breakout and something fun to watch and something to be very careful of if you're just trading it. But from a producer standpoint, this is a good opportunity, a good reason why using some of these options, leave that top side open and allow you to capture that gain in the cash market.
I wonder too, you bring up domestic demand. Are some folks starting to substitute cheaper proteins in here, pork, chicken, et cetera, versus beef? I'm wondering if that's maybe having an impact on some of this pork demand right now here domestically, Jacob.
I thought a lot of that. We were talking a lot about the pork versus beef trade as we were going through the middle a couple of months ago. But when you look at it, both of them are strong. Box beef continue to stay strong. The pork cutouts continue to stay strong. So that's why I'm just saying, look, protein in the American diet. I mean, it's just, I believe that this is what the consumer is telling us. We've seen exports stay, relatively strong, even with the dollar going up. I thought with the dollar going up, we can see them back off further, and we just haven't done that. So yes, I do believe that that's part of it. Is maybe some of that dollar investment into the diet has come to pork from beef, but I don't know that it's as much as that as it is that, hey, we're still willing to buy it. We want the protein, and it's counter seasonal too. It's something that we don't see that can usually building this time of year.
Yeah, very true, very true. Cattle market to on feed report seemed to be pretty much in line. Maybe some folks were surprised by the placements number we saw Friday, but you look at cattle as a whole, I still feel like a lot of folks I talk to are bullish this cattle market. I'm a little worried. Are we getting toppy here? I mean, should we be putting some hedges in place? Things like that. I mean, what's your thoughts on the cattle trade, Jacob?
Well, first of all, I mean, my job is to be a risk manager, right? And so for the producer to see prices at a very, very high level, yes. How you do that and how you use it is kind of what we work with. But should we be doing something? Absolutely. I mean, this is an opportunity to lock in profitability, first of all. The one thing that's been worrisome with this livestock trade is the fact that the feeder cattle have not really been leading it higher, right? Kind of have had, we've steadied out even to a drift lower. And then in a day like today, where you see a $2.50 to $3 move lower, that fears me that the feeders are going to start being the leaders. And you got a couple of very, very optimistic things. Yes, we had a little bit larger placement, but that larger placement was also a part of a huge placement last year. So 98%, we knew it was going to be smaller, but the market didn't react quickly. Like we didn't after we saw that on Friday. We didn't do this on Monday. Okay, so I thought that was a very strong positive note to the especially the feeder cattle market after not being so negative on Monday. The other thing is that part of that placement was 40% heifer still. This inventory is not going to get solved very quickly. Yeah, that's something that we're going to have to wait another year to see. Hey, what are we starting to hold back? Are we going to continue to start to build the cattle herd, the beef cattle herd? Maybe mid to 2025 to late 2025 and 26. So I think for me, that's the positive thing about it. The question that we've had all year long, we've talked a lot about the demand. Does it stay up? Does it can stay intact? And I think that's still the biggest fear that we have in this as we go forward.
Good thoughts as always, Jacob, as we close it out today. Anything final you want to mention or reiterate to folks?
No, I think we covered a lot. I think that sometimes in these grain markets, whenever there's not a whole lot of directions, it's okay to do nothing. Have your protection, put your orders in place, and be ready. When you see markets like this in the livestock, I think it's really, really a key time for you to be aggressive and to act and make sure that as a producer, you're not just subject for a huge move. You can see something fall quickly and realistically, I mean, you can see a big move down, as far as percentage goes. And that could be very hurtful to your operation.
Well, I know if folks want to reach out for a conversation, take a look at your intel, the app, and much more. You guys also have registration open for your conference in Nashville, all on the website, agmarket.net, right, Jacob?
Yeah, Jesse, I think it'd be a fun trip to Nashville. There'd be a special guest singing for you too, so you may know that guy. But it'd be fun. It's an opportunity down in Nashville to get together, meet the whole team. It's an awesome conference. We have an awesome lineup of speakers, so we'd love to see you there. If you do want to chat, just look us up, agmarket.net.
Yeah, find all that info there. I'm looking forward to being there with you guys again this year for the conference coming up in February in Nashville. Agmarket.net again for more. Jacob Burks, always good to chat with you, my friend. Thanks for being with us today. Appreciate it.
Jesse, appreciate it.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.